And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures family. It's time for the market prep to Thursday, March the 2nd. My name is John Hoagland. I really appreciate you trusting me with your time as we seek accurate context, good risk management, and staying patient in our trading. Hopefully, if you're in the markets already, things are going your way. We've got some changes going on here. Another interesting and challenging trading day ahead of us. Was celebrating spring yesterday. It was almost 60 degrees yesterday afternoon here in Chicago, and now I'm understanding tomorrow we may get 6 to 12 inches of snow. I'm not very excited about that, but I am thankful that it's probably not going to stick around for very long. Economic numbers this morning. The jobless claims numbers came out. Initial jobless claims, they were looking for 195,000, came out at 190. Continuing jobless claims, 10,000 less than they were expecting. Productivity and costs also out without getting too specific about the numbers. Productivity down, labor costs higher. Nat gas numbers due out at 9:30 this morning. For all of you that are interested in nat gas, we do keep an eye on that here. I don't trade it, but it's a fascinating market that I've just kind of been studying for a little while. So, what's going on? In our equities, stock index futures linger below that February low. It didn't take long for the market to take a look down there. Lots of folks focusing on that, on those levels. Rates continue to creep higher, and the specter of recession lingers in the air like the smell of garbage. It seems like it just won't go away, and is probably not going to go away for quite some time. Some positive earnings this morning in the retail sector. Macy's and Best Buy showing positive results here this morning. We're also looking for Costco and Nordstrom after the close. And we've got crude prices moving higher as U.S. exporting rises with no real change in production here in the U.S. So seeing crude oil creeping up towards the upper area of the longer time frame area of balance we've been. And we're going to see all this on the charts very shortly. We've got the VIX up a little bit, about 2.5% at 21 this morning. The dollar index almost at 105, 104.96, just about as close as you can get to 105 without actually being there. It may actually be there by now. I just looked at these numbers a little bit ago. And yield on the 10-year up above 4%, 4.07 last time I checked. So rates continue to rise. We know that they're going to continue to rise. Just a matter of how high for how long. I don't see that we have any talking Feds on the schedule here this morning. Let me double check that because they can always pop up. Take a look, see here, and see if I see anything on another website here. Walter is due to speak at 3 o'clock this afternoon. And that's the only talking Fed that I see here on the schedule. That's a different schedule, of course. The one that I was looking at early did not include those. Did not include that. So, as always, I ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome in my little futures family here. Subscribe to our YouTube channel. You can get notifications when we do go live. Good morning, Brian, first in the room, winning the prize this morning. Shaw looking like we are going to be opening below that February low. Again, we'll see that in the charts very shortly. Scott saw and he conquered. I've got my brother Randolph here. Good morning, Rick. I love you. Ainsley, Dr. VJ, Dr. The Rooster, Stephen, Joe. Good to have you with us this morning. John, I did not have trouble. I'm glad that you were able to get that password reset and get into your platform. Zorain, Jason, Urban Cowboy. Good morning. Good morning, Jason Lee, Marcelo, Terry King, Bill Phillips, Orion, Dan Trader. Good to see Anissa, Rob T, Khalid, Rusty Golfer, my spirit animal. Good morning, Mia. Good morning, Trading Research. Travis, good morning to you as well. Will, good to see you. We're wishing all of us good fortune. Cone, good morning. We say, expecting 7 inches of snow in southwest Michigan here tomorrow. Yeah, it's about what it looks like we're going to be expecting here, Travis. I'm not going to shovel. I'm just going to let it melt. Ainsley, good morning. Keith, good morning. Bear goes long. Waller always shakes things up. Yeah, but it's not till later on, so we're going to have to worry about that so much here this morning. Ground Zero. Family Guy. Good morning. Sarah Hall. Prayers and love to you as always. Mike H. Dowitzer. David G. Great British Pound US dollar in an inside month. Going to be a great day when it gets around to those levels. Thank you for pointing that out for us, David. And we're hoping that you have great days when it gets to those levels. Of course, we are looking forward to everybody having a good session today and a good session every day. Snowing in Tucson. Pete, I have some friends in Tucson. I'm sure that they're very excited about that. We have Make Hogue Money this morning right after the prep here this morning. I'm going to get that link out so you can join us during the Zoom meeting so you can vote. You can watch it on YouTube. You can comment on YouTube, but if you want to be able to vote, you got to come to the Zoom meeting. So we'll pop that in there. There's the link to register if you haven't registered. That is for this morning's Make Hogue Money just after, again, the market prep. I can't believe it's snowing in Tucson. That doesn't happen very often, right? All right, so we're going to jump relatively quickly into the chart so we can get into Make Hogue Money and you guys can come up with some good trade ideas. Remember, Make Hogue Money is your ideas, my risk. We're going to have some fun. We're going to see if we can make a little money. We had a couple of winners yesterday, just some small winners and during the end of the day yesterday, and it was good to have our good friend Joe back with us for the Make Hogue Money session yesterday, and hopefully we'll see him this morning, and hopefully we'll get Randolph involved here this morning as well. My brother, Randolph Duke. And we'll see what we can find. It's going to be an interesting trading day. Let's jump into the charts and see what we're looking at here. And my hopes and dreams have been dashed. We've been unable to hold the February low. We've seen on the monthly chart 1, 2, 3, 4 higher lows. We've now broken that. Unfortunately, that's the fact. Now what do we do about it? Well, we've got some continuation to the downside coming at us already this morning. Yesterday, approaching the level, the February low and last Friday's low, we only added 1,200 in open interest. We're going to see in the 30-minute chart, we had some pretty positive delta, but price couldn't move higher. I'm a little surprised at the small amount of open interest that we added yesterday. Volume was really good in futures. It was 4.2 billion on the New York Stock Exchange, so pretty good. Again, that open interest is a little bit disappointing yesterday, but it has been accumulating over the last 3 sessions. So we're seeing more interest coming in at lower levels here. Again, that last week's low, February low, is pivotal for us today, and obviously looks like we're going to be opening with a gap to the downside. Here's the range yesterday. Look at how positive delta was by the end of the session yesterday. It was up around 22,000 positive delta, and we couldn't bring price higher. Delta, as we know, is the number of contracts that trade on the offer, which is positive delta, minus the number of contracts that trade on the bid. So a positive delta of that magnitude indicates some pretty aggressive buying going on, but the market unable to push higher indicates the potential for some longer time frame sellers coming into the marketplace. That's why I'm a little bit disappointed by the amount of open interest that we were able to add. Now, granted, that's the preliminary number this morning. It may prove to be higher when we get the final numbers out around 9:30, something like that. So we'll have to keep an eye out for that. But again, the fact that we had really positive delta yesterday and the market was unable to move higher indicates the potential presence of longer time frame sellers. We're going to be opening with a gap with pretty much high probability this morning. Overnight inventory is showing short. Overnight, we broke down through that February low. It's been resistant ever since. Is it going to remain resistant? Are we going to get back to it? We're going to open with a gap and not be able to close the gap. In that case, we'll be looking for opportunities to sell. The market is going to be opening out of balance in many time frames, so there is the possibility that our good trade locations may happen early in the session. Take a look at the TPO chart, which we've been watching the weak highs in succession above, thinking maybe we're a little too short in the hole here, but now we may be seeing new selling coming into this market. And of course, as we know, anything can happen. Yesterday we had a normal variation day. The IB high is the high of the regular trading hour session. Normal variation extreme. The point of control is below the center of the profile, indicating that throughout the day yesterday, even with positive delta, sellers were winning the game yesterday. Sellers winning the game. Sound like Charlie Sheen. Winning. So now where are we? Well, we are going to be opening with a gap, and we are going to be below that February low. Opening with that gap gives us the potential opportunity for an early trade, and we'll check that out and make Hogue money. We'll vote if we want to take the opening range trade. We'll see what happens then. The way things are looking, if we continue to show acceptance below February's low, there is room. There is space. We've got our next weekly kickoff low here, all the way down at 38.89. This is largely based off of a past naked point of control, technical analysis, a little bit of math, and some tea leaves and chicken bones. But this would be a target for us to reach upon acceptance of price below February's low. Let's take a look at crude oil as it's about to open here. So I've got a couple of trend lines here that I just recently added. We've got lower highs, higher lows, range-bound activity. This is a long time frame area of balance. Our little auctioneer has been pandering for us for a little while here in longer time frame. There have been some decent daytime frame opportunities, but in the longer time frame, this market has gone basically nowhere. Yesterday, on higher volume, adding 5,800 in open interest to last week's high. We are testing that last week's high, gauging activity around it. We're going to have to see how the market opens here. But overall, the market is still imbalanced and still in short time frame control. pretty good boost in open interest. If you remember, open interest in crude oil was really just piling in after the first of the year. It's now been kind of coming off. Yesterday is the first day of positive open interest in, well, I was gone for a few days there, but I'm seeing a lot of falling open interest. The day before yesterday, we lost 3 in open interest. Today we add 5,800. So the auction to the upside may be starting to build a little bit of activity in that direction. Last week's high, resistant, supportive. We've opened now with a gap. Looks like a pretty sizable opening range. But if we can't close this gap, the idea is to look for opportunities for longs, to look to buy weakness. Last week's high, of course, pivotal. The last couple of days and in the overnight, finding support there. Gap, opening range trade. Take a look at the profile. So normal variation, extreme day. Look at the volume point of control and the TPO point of control. This is some pretty good rejection of lower pricing. We do have a late spike. The base of it is 77.70. We're opening above the base of the late spike. This marks acceptance of higher pricing. Look at the market go, already pushing to the upside. Doesn't mean that it has to keep going that way, but if, again, we can't close this gap, if we leave the opening range at the low of the session, that's going to be very friendly for upside continuation. Take a look here. Excess low, weak low here. Now we've got excess. Weak low here, but excess down here. A little bit of excess down here. Boy, the market really just capitulated down at this level and started to turn. So we start to see continuing increasing participation volume with the gap. We cannot fight this move to the upside until we find some sort of structure. We close the gap. We get back inside range from yesterday. Value area special situation play is a possibility as we have opened above price. We got to stay looking to the long side as long as we do not fill this gap. If we fill this gap and the gap fill becomes supportive, we got to pay attention to that too. So be looking for longs on weakness in the crude oil today unless we find acceptance back inside yesterday's range and certainly inside yesterday's area of value. Take a look at the NASDAQ. NASDAQ lost 4,200 in open interest yesterday as we approached this Friday and February low. We did not accept below it yesterday. Take a look at the 30-minute. We traded right to it. We closed above it. Now we've found a move down through it, finding resistance in the overnight. Overnight inventory is to the short side. High probability of opening with a gap, and we've got our weekly kickoff level, which remained from last week, where the S&Ps did not. So we've got our February low. We're now below it. We are now also below the weekly kickoff low. This is a critical area here. It's going to be kind of risky because there's probably some riskier trades in between here. But again, opening with a gap, being unable to close the gap relatively early, below February low and even below weekly kickoff low. I'm going to see if this market can continue to accept and move to the downside. There's that 30. What else do I have here for us? Volume was good yesterday, but that open interest was lower. So it looks like it was long liquidation versus new selling coming in. We may see that new selling coming in perhaps today. Here's the TPO chart. Excess, IB high, the high of the regular trading hour session, normal variation, extreme trading, extreme session, point of control down here, volume point of control down here. Yesterday, The sellers, be they long liquidators or new selling, won the game yesterday. Looks like they're winning the game so far as we are opening with a gap. Gold. Getting a nice pullback here in gold, at least for now. This is the daily chart. We have our reversal pattern here. We've had some increases in open interest on higher volume. Yesterday, we added another 4,700. That's the estimated open interest. So that would indicate that our upside auction, our reversal and upside auction, is still showing some relative health to the upside. Volume was good. An increase in open interest on a higher day indicates the potential for that day for the price action to continue in that direction. So far, we've got an inside extended trading hour day. You might start to think that this is looking like a bear flag, and that has popped into my head as a distinct possibility. Although, day before yesterday, we added 3,600 in open interest. Yesterday, adding 4,700 in open interest. Bear flags or bull flags tend to lose open interest and lose volume. The opposite is occurring here in gold. Here is the 30-minute chart. We're continuing to come up and try and clean up information or leftover weaknesses in structure and naked points of control. Where are we? What are we doing? Overnight inventory is to the short side. This is night before last low, yesterday's high. It's an inside extended trading hour range. What this is saying to me is the market seems to be wanting to take a little bit of a break. We're opening between the point of control from yesterday and the point of control from the day before. I'm kind of looking at this as a potential for a repair type of situation, a repair day, a rest day, if you will. We finish up closing up this gap. We trade down to the point of control from 2 days ago. We trade up to the point of control from yesterday. So I'm going to stay patient. I'm going to focus on those as my extremes for my opportunities to take an execution. There's fish here. They're going to be tough to find. I wish we had a fish finder. Unfortunately, in futures trading, they don't exist. We have to use what we see and what we have. So if we're going to fall into repair, points of control are comfy levels for the market to go back and revisit. If we do get a revisit to either one of these, it gives us the opportunity to limit risk. And we may find that those are better trade locations than anything we're currently seeing right now. We've closed the gap. Yesterday, normal variation day, extreme, point of control below the halfway mark, point of control below the halfway mark, excess, initial balance, neither side remained at the high nor the low, just barely checked it down here. So if we're going to be thinking about, well, where's our good trade locations? If we're going to fall into repair, well, repair tends to go to point of control and point of control. We're right between them. Stay patient. Not in a big hurry here in gold this morning. Here's the euro. What do we have here for our euro? Hang on just a second. All right. There you go. Room for ingenuity. Futures fish finder. That's good. I like it. Maybe we can invent that. Okay, yesterday, up day, volume good, open interest added 7,000 estimated. So the upside auction presented as relatively healthy yesterday. We have our bullish engulfing pattern here. We're seeing quite the pullback here in the overnight and in the early session here, but we're still inside the regular trading hour range from the previous session. 30-minute chart, inside, bear flag. I was looking at this as a possible opportunity for an execution. We've got a lot of shorts in this market. Earlier, I was looking at the possibility of a repair similar to what we saw in gold. This looks very interesting to me. I did not see this one coming. Take a look at the TPO chart. What did that look like yesterday? It's a normal variation. Weak high. It's a weak high. Normal variation, extreme. Buyers appeared to be winning yesterday, but it's kind of P-shaped, which would lose open interest, where we gained open interest. Excess. Rejected late spike, weak high. I'm still looking for an opportunity to buy this market on some sort of structure on weakness. The low right here where we left this excess below looks interesting. It gave us an opportunity to fish relatively close to that. That might be an interesting spot for us. Take a look at the 10-year, which is now below weekly kickoff low as rates continue to move higher. The price of the 10-year dropping. Open interest, we increased by 34,000 yesterday. Our downside structure is intact, and it is still building open interest, building volume. I'm giving the downside auction until today kind of a B, but today I'm giving it an A because we're seeing the continuation to the downside. Last week's low, weekly kickoff low, are going to be pivotal. They are now above price. With the yield on the 10-year up above 4%, we're really gonna have to look out below here, and it seems as though it's already on the way. Here's the 30-minute chart. Overnight inventory short. The market opens here at 720. It has been continually driving lower. We've put in a weak low in the day time frame. Don't see that a gap close is really in the cards. If it does happen, that gives us opportunity to be able to limit risk relatively close to the weekly kickoff low or last week's low. Here's the TPO chart. We had a a double distribution day, actually. Let's make this look like it does there. So we got a double distribution. We have a distribution of volume and time here. Single ticks, single prints, single distribution here. Closing relatively weakly. We got a weak low here. The market is primed for continuation to the downside. We're watching to see if we do get a gap close anywhere up near that 111 weekly kickoff low. It looks very interesting for an execution to me. We'll take a quick look here at the natural gas and we'll get down to business. So natural gas added 11,000 contracts on a close above the second close above weekly kickoff high, overlapping to higher ranges. Volume not all that impressive, however. This market looked a little bit different a couple hours ago. There's been some changes in this, and we're still waiting for the nat gas numbers here at 9:30. So here's our weekly kickoff level. We have a late spike that is now showing acceptance. Earlier, it was looking like it was going to reject. Buyers really came in and pushed this market up here. It is now accepting above the late spike. Take a look at this on the TPO chart. So there's our late spike. Like $2.80 pretty much is the base of the late spike. We've opened and we've driven above it. So we're showing signs of acceptance of higher pricing based off the late spike. I don't want to step in front of this move. I'm going to be looking for opportunities to buy pullbacks or buy weakness if I get the chance. And then, of course, anything can happen because we have the natural gas numbers due out here at 9:30 Central. So it's a lot of information coming at you, ladies and gentlemen. Pick and choose the things that you want to use. Our real goal here isn't to be calling trades. It's to be looking at the context of the market and helping traders make those decisions on their own. So again, we're looking forward to seeing your success always. That's what this is all about. And we're looking forward to seeing you in Make Hogue Money, which is going to start in about 5 minutes. So I'm going to take my early morning deep breath. I'm going to remind myself to stay humble, grateful, creative, and centered in my trading today. And I'm going to look forward to seeing your success. Join me for Make Hogue Money. Maybe you can help me with my success. Maybe we can help each other with that success. And I think that is going to be it for me for today. And then tomorrow morning, Friday, the market prep, and that'll be it for the programming here. Not sure if they're doing the podcast today. You may see me later on. I don't know. Either way, I'm hoping you have a great trading day. Get out there and profit. See you in just a couple of minutes for Make Hogue Money. And we'll have some fun. Maybe make a little money. Have a great day if I don't get to see you. Blessings to my futures family. Make sure you pray for peace. Be kind to yourself and be kind to others. Trade well today.